Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. My job here is to not give you guys predictions but identify levels so that we can trade it unbiasedly to the upside or to the downside based on the setups that the price action gives us. And you guys can see that we have what clearly looks like a head and shoulder pattern to me, but no breakdown of the neckline, right? I have the neckline around, well, I have a fib level around 586. Once again, the SPY failed to close below 586. They failed to break it down. We tested, washed below it, but failed to get that daily chart close below it. Still closing around that area or just above it slightly. We managed to wash below it multiple times, getting down just shy of that 584 level, but could not break it down. I would assume that the neckline is around that area, 586 to the 584 level. So bears, that is the critical level that you guys would want to pay attention to, in my opinion. Now we go down to the 15-minute chart. Remember, Uncle Charles is a day trader, so a lot of the setups I give you are based on day trading mindset, a day trading mindset, a day trading perspective. Okay, but you can swing trade using these concepts as well. You just have to go to the higher time frame, if you will. So I identify my levels on the daily chart and I use it on the 15-minute chart to trade. Some of you guys might be frustrated with the SPY right now. It's been chopping. You guys can clearly see the last two trading days, SPY has been range bound. And the levels I'm watching as far as that chop goes is 591 all the way down to 584. That's a $7 range. Obviously, SPY is just above that 591 level. Can they break the chop range today? But remember, when I give you guys these levels, okay, they're not predictions. They're for you guys to use for yourselves to trade, okay? So basically, how do I use it? Last week, okay? Well, not last week. Tuesday, before New Year's Day, I gave you guys that 589 level. I gave you guys the 591 level. If you are in my Discord, I gave you guys the updates, the levels, the setups beforehand, and I wrote here as of now. Oh wait, that's the next day. All right, this was New Year's Eve. No longs unless 591 clears to put 592.6 and 595 in play. If 591 defends and 589 fails, 587.5 or lower would be in play. And we are price action traders, which means we follow the price action. We enter based on the setups. Uncle Charles always say use a 15-minute chart, and boom, we broke it down. It took some time. It might have frustrated a lot of people, but we didn't get the breakdown until the 10:30 15-minute candle. From there, the SPY gave us a beautiful drop going all the way down to the bottom of the chart range, just shy of the 584 level. You guys, I'm trying to give you guys that simplicity, all right? Find the levels and then you trade based on the setup. We break down support. You want to look to short with your stop loss just above where you entered based on the level. So if you entered on a breakdown of 589, your stop loss would be above 589, and the trade gets invalidated when 589 gets recaptured. So if you entered on a breakdown of 589, you cut loss when 589 gets recaptured. How do you know when something get recaptured? When it closes above or below it on the 15-minute chart. Does that make sense, guys? Does that make sense? You want to look to short when support fails. You want to look to long when resistance clears with a proper stop loss. And it works out beautifully. It doesn't work out all the time, level to level style, but it works out more often than not. And that's what trading, especially day trading, is about. You're trading based on the probabilities and just taking your profits, no greed, get in and get the heck out. Now, as far as the plan for today, we have to go to the daily chart for that. And you can see on the daily chart that we have an inside candle setup. What does inside candle setups mean? It means there is chop. How do you trade chops? You identify the chop range and you wait for the break of that chop range. And in this case, this context, we have to look at the mother candles range, which is Monday's candle. The high is at 591.74. Now I have the 591 level that I'm referencing, and I still am, but it's good to recognize this context and add it as a level. All right, in case that clears as well, you will remember, hey, on the daily chart, That was an important pivot level. That will tell you to be bullish. If we can clear those levels with 592.6 and 595 as targets. Above 595, we can recapture that multi-month trend line. Maybe get bullish again. Maybe we get a W pattern playing out. That would be bullish. But it can't be bullish unless we get above those levels. 591, 591.7, 592.6, and 595. Yes, we have a clusters of levels. But if you know how to use those levels, like I mentioned on the 15-minute chart, you're going to love them. You're going to love them. Anyways, now that's the bull case scenario. The bear case scenario, we got to break down support levels as usual. Now, the last trading day, New Year's Eve, I mentioned you want to look to short if 589 fails, right? You look here, it broke down 589, gave us a nice, beautiful day trading move. Few dollar moves. It's good for you to trade with options. That's pretty much still the plan for today. Now, it's above 591. It's trying to retest it as support. But the bear case scenario is if we break down 591 and 589, the same way I'm showing you here on the 15-minute to 30-minute chart. So you use a higher time frame. The higher the time frame, the better. But we break down those levels and pull back time. We can possibly go back, hit 587.5, 586, and the bottom of the chart range around 584. Okay, whichever way we break out this chart range is where you want to lean. We get above 591 and 591.7, that's bullish. You want to lean bullish. And if we break down those support levels, especially 586 and 584, that will be the break up down of the chart range, but also this bigger pattern here, this head and shoulder pattern, the neckline, that will be a breakdown of the neckline, and then I will get bearish. So I'm not giving you guys prediction or telling you guys where I think the market's going to go. And even if I did, I'd probably be wrong, so it's useless. But we want to focus on what's really important. Not focus on what we can't control and focus on what we can control. Okay, focus on what we can control, and that is identifying the levels, the pivot levels, and how we react to them. We clear resistance, you look to long, we break down support, you look to short, and I, Uncle Charles, like to use the 15-minute chart or higher to enter these setups. Does that make sense? Enter and exit these setups. Level to level style, baby, with runners. Now, triple Q is around 516.7 right now. I have that fib level at 515.5 and 514. Got to break those levels down to send us back to the downside, because right now it's gapping up. We had a bearish New Year's Eve, but now it's trying to gap up. So it's going to have to break those levels down to send us back down. 515.5, 514, 512.5, and 511. Those are your support levels. Please add them to your chart. If you've been watching Uncle for a while, you probably already have those. And that's great. That makes me very proud. And if they break down on the 15 to 30-minute chart like I showed you, you want to look to short. Now, that's the bear case. Bull case, if this gap up is not a gap and crap, then it must clear resistant levels. 517, 519, and 520.5. 520.5 is a fib level, but it's also based on this multi-month trend line. Okay, multi-week trend line, the green one right here. We recapture that, I would be bullish again, and maybe we can get a W pattern playing out. If this is a lower high, then we need to break down support levels. Take out that potential double bottom there. Tesla looks extremely bearish ever since we had that dark cloud candle. Uncle talked about the dark cloud candle. Uncle gave you guys the levels. Holy moly, donut shop. Let's go. 5 figures, 6 figures, 7 figure, 2025. Let's freaking go, chat. Let's freaking go, my fellow sheeps. Anyways, Tesla trying to gap up here. Okay, trying to gap up here. I have support at 409, 407, 405, in the tough buy zone and fib level at 403.6. Those support levels must fail to keep this bearishness going. Okay. And it will be bearish. Below 403.6, I have 402, 400, and the next macro level, fib level at 398.8. Now, if it is a move to the upside, as usual, resistance must clear. For this to not be a gap and crap, 411 must clear to put the next resistance level at 412.5, 414, and 415.5 all in play. Above 415.5, I would be bullish in favor of a bigger bounce, because that is a critical fib level. All right, NVDA, is it still messing around? Is it going to give us the false breakout or not? Officially, it did not. Okay, we once again just back tested that trend line. No official false breakout setup. Now we're gapping up. If there is follow through, 136.5, 138, and once again 140 must clear. They've been failing to do that, but if we can do it today, we know it's going to get real bullish for NVDA. And once again, we break down support at 135 and 133.5. We can get in false breakout mode, and it's going to get real nasty to the downside. 132, 130, 127, all would be in play. IWM still just chopping around. If it wants to be bullish, 224 and 226 must clear for this potential W pattern to play out and send a skyrocketing to the upside. 224 and 226 must clear to trigger calls. But if support at 222 fails, we are dropping low back down to 220 and 218. That's around where the double bottom is. The buy zone is around 218. But if we can break that down, 216.4 and 215 all incoming. Holy moly donut shop. Apple has been pulling back. It's been looking good for bears. Bears should be happy a little bit. They broke down another support level of 251.5 on New Year's Eve, Tuesday. So to continue the pullback, 250 and 248.5 must fail to put 247 or lower in play. To end the pullback, 251.5 and 253 must recapture. Bottoms usually get put in when we get false breakdown setups. Okay? So 251.5 and 253 must recapture to trigger calls. Amazon, we did have an official breakdown of that 220 level on New Year's Eve, but now we're gapping back above. Supports at 222 and 220. To keep that breakdown on the daily chart intact, it must break down those support levels today, intraday, to put 218 and 216 or lower in play. There's a big gap, multiple gaps to the downside that needs to get filled, but those levels must fail for those to be possible. If this is not a gap and crap, resistant levels must clear. All right, 224, 226 must clear. Above 226, a bottom could be in. That's the recapture of a macro level, fib level, and a breakout of this down trend line. Above 226 would be bullish. 228, 230, and 232 would all be in play. Meta has a support at 591.5 and 590. Okay, trying to gap up from the close on New Year's Eve. If this is a gap and crap, those levels must fail to trigger puts and give us a drop back to the downside. Otherwise, above 591.4, I'm overall bullish. And if we can clear 593, 595, 598, 600 plus would all be back in play for Meta. Microsoft was looking bearish just a couple of days ago. It was very nice as it hit this 50% fib level that I have here, but now we are gapping up. From here, I have resisted at 428, 429.2. If those two levels clear, bounce time. Gap and crap, nope. We're heading up to the upside. There is a gap at 430.5, and if that can clear, 432 or higher is incoming. If this is a gap and crap, then 426.5, 425 must fail to put 423.5, 422, and 420.8 all back in play. And a below 420.8 could give us a test of this trend line here, which would be around 418 to the 419 area. DXY gave us that bounce, got above 108, and now it's trying to clear that 108.6 level. I mean, DXY bullish. Gotta watch out for SPY now, okay? And if it's above 108.6, 109, and 109.3, all remains in play. Can't get bearish unless it get below 108.6 and back below 108. Coin gave us a nice drop. Wow, I hope if you guys are trading this, I hope you guys are making a lot of money. But I do have resistance at 258 and 260. For this to be a bounce, those levels must clear to put 265 or higher in play. Above 265, I would definitely favor a bigger bounce up to 270 or higher, maybe even 274. Okay, now support is at 256 and 254. If those levels break down, 252, 250.7, 249 or lower is incoming. Maybe all the way down to 246s. All right. DOGE still within the chop range of 34 cents down to 30 cents. And right now we're testing the top of the chop range. If 34 cents can clear, guys, well, 34.5 cents can clear, that will be extremely bullish. I might even long it. All right. Otherwise, I'm just going to stay neutral while we're still in the chop range. 30 cents to 34.5. Oh, it's so weird with the cents. 0.345 down to 30 cents. Okay. That's the chop range. If it cleared that level, long. Otherwise, I'm gonna remain neutral. Bitcoin looked like it's trying to bounce after retesting that trend line. Okay, head and shoulder, didn't break down the neckline. Got to break it down. Didn't break it down. Okay, supports at 95K and 93.3K based on the trend line. Got to break those levels down to be bearish. Otherwise, as long as above 95K, 98 and 100K, it's all in play. All right, guys, that's what I have for you guys this morning. Thank you guys so much for watching. Good luck today. Peace.